You're going to see protests from people who never protested before. And I think it's going to scare the politicians. And I think it's going to break up some of these centralized monopolies too, Sean.
Hey friends, welcome back. Thank you so much for tuning in. It's wonderful to have you all back, and I want to thank each and every one of you for your support. Please make sure you click the notification bell so you stay up to date on my latest videos, and hit the subscribe tab. I know many of you get unsubscribed. Guys, today we're going to talk to Bob Kudla. He's the founder of Trade Genius and a longtime friend and supporter of SGT Report. We have so much to talk about: the economy and the future of our nation. Bob joins us now. How are you, Bob?
I'm doing good, Sean. How you doing?
Well, I'm doing quite well. Can I just share a brief story with you about a friend of a friend?
Sure.
All right. Well, actually, the friend is a friend of my wife's. So listen to this. My wife's friend, Sue, is a hair salon owner, and her business has been shut down now for a month or more. And so she applied for one of these forgivable small business loans. She got in under the wire, and she got approved for $50,000, which is forgivable if it's spent correctly. I guess on payroll is how she has to spend it. $50,000 forgivable. Across the street, we have a neighbor with a disabled 21-year-old son who barely worked at all over the past year, very part-time, maybe earned about $2,000. He just got a $1,200 stimulus check dropped in his checking account, according to my neighbor. Bob, the trillions and trillions and trillions we're seeing being printed now, and the moral hazard of all this free money, I don't think it can be overstated how dangerous this is. Do you?
Yeah, I mean, it's even more than that, Sean. So you have the PPP money. It doesn't have to all be used for payroll, by the way. It can be used for rent. So you don't even have to even bring all the people back. It can be used for other essential expenses as well. And even if it wasn't forgivable, it's a 1% loan. It's cheaper than their line of credits they get with the bank. But there's also the emergency funds. That was a $500 billion of emergency money that's being lent out for 20 years at 3%. That money's been sucked up. And, those companies can use it for anything they want. So, they could be out there buying companies and buying dividends and doing whatever they want with the money. They don't have to use it for essential services. And then you have the unemployment federal $600 for 12 weeks. So if you're making less than $30,000 a year and you got unemployed, laid off, you don't have to come back until July, and you're making better money than you would if you've been working. So it's creating a rift between employer and employee. And then they're going to do this $2 trillion stimulus package. They also shoved a whole bunch of money into the healthcare industry to pay for all this research. And our balance sheet is going from $4 trillion probably to $10 trillion. Now, what's going to really fool people, Sean, is that at first it's going to look like this is the smartest decision in the world because all they did was start backing, bad loans and we don't see any inflation, but it's going to come like a tsunami because they injected hot money into the economy. And you have a lot of people that aren't working, and then you have expenses that are going to go up like food. And the rents are going to be an issue because people aren't paying rents. And so to get a rental property in the future to rent out, they're going to require more money from you. So it's going to be more than like an inflationary problem. It's creating winners and losers at an absurd level. I mean, there's whole industries that are going to be wiped out completely, whole industries that are going to be basically protected. And you're going to have, this imbalance that's going to cause what I consider it. I'm finding a little bit of a scratchy throat here. Basically, an inflationary depression is going to happen, Sean, where essential prices, you can see it in food already in the next year or two when these supply disruptions get even worse, is you're going to see food prices go up even further, and people aren't going to be making the money, because there's no incentive now for any employer to raise anybody's wages. And then you're going to all of a sudden have people, coming off in retirement, and then you're going to see wages start to inflate. They just created such an imbalance in the economy that in a year or two from now, it's going to be awful. It's going to be like what happened in 2011 with the Arab Spring, when food prices were going up at the same time currencies aren't being trusted.
You know, you sound a lot like Peter Schiff. I'm going to play a soundbite for you in just a second. But first, a quick note. I know you're having mic issues today, and you've tried to address those. I think it must be bandwidth. So many people are using Zoom and, you know, the internet that everybody's being choked down a bit. So just a quick note there, guys. All right, before we play that Peter Schiff bite, just a quick note here. You've had some winning trades. Boy, I'm understating that. Nearly 80% winning trades over the last month. I'm in one right now, Mosaic. There have been others, Sand, DHT. Bob, I know you like to say we've gone from a stock market to a market of stocks, and I think that's where your software comes in, helping people pick winners. Do you want to talk a little bit about that?
Yes, Sean. So, what our system does is we created an algorithm that basically sees and it detects what we call money flowing in. It's based on price action. And so we could see when certain stocks and certain sectors start to rise, and then we go ahead and we go ahead and put trades on, call them our buy signals. You get them on your phone, and these are short trades, 3 to 7 days. Anywhere from 3 to 5%. On any given trade, and it's high probability setups. And then it also we go ahead and coach you through when you should take profit or when you should set a stop, and so that we can give you the highest possible chance to make money on the trades. And we've been doing this for a long time, but what we've done in addition to that, and it's available now for anybody who's a subscriber, is that we took our system and created 11 course training package. It's free. It's part of the service to show people how to set their charts up, how to use the system, why the system works, and then how to manage the trades through it. And we've gotten overwhelming feedback on how we simplified trading for people. And now they could trade things that we don't even follow because they get such high confidence in how to take the trades. In addition to that, we have our chat rooms that are running 24-hour a day, 7 days a week. And then we also still provide trades every day. And one of them I sent you a chart on Teva. We're still in the trade. When I sent you the note this morning, said, hey, take a look at this chart. We got in on Thursday. It was up 7%. By the close, we're already up 10% on the trade. Those are typical of the type of trades that our system finds. It's basically called a dual alert, where when a couple things come together, gives us high probability to make money. And then boom, you're in the trade and you're out of the trade. So you can use it to day trade if you like to day trade the futures, or you can use it to swing trade, different equities or different ETFs. And then I'm in the room when it's open all day long. And so people can ask questions of stocks that I'm either following or they're trading on their own. So if you take advantage of our system, we put together some specials together, 1 through 6. I've already pre-discounted for your listeners, like we always do for you, Sean. 65% off, only good till Thursday. We discounted it pretty heavy. We called it our stimulus package. And then if people just want to buy things individually, they can use promo code April, get 50% off our normal pricing. That's the retail pricing that's in the on the website. So you can just call us, you can chat with us, you can email us, and we'll take care of you. But the special pricing ends on Thursday at midnight.
All right. Thanks, Bob. I'll leave the link below for you guys. All right. So let's get to that Peter Schiff bite. He sounds a lot like you did here earlier in our interview.
People think because we printed so much money after the '08 crisis and seemingly there was no consequence, right? The markets made new highs and we didn't have all this inflation that guys like Peter Schiff were warning about. So now everybody thinks we could do it again. And like, oh, we took the balance sheet up to $4.5 trillion. Now we can take it to 10 trillion or 20 trillion. Hey, there was nothing wrong with the national debt of 20 trillion. So why not 40 trillion? Why not 50 trillion? I mean, even the Republicans now are like, yeah, I mean, just keep on printing. We want to bail everybody out. Doesn't matter. Let's cut taxes and increase spending. And it's at perfect time now. Nobody expects anything to go wrong because they got lulled into this false sense of complacency. But this thing is going to implode very, very quickly.
I'll pause it there. I think he's spot on, and that is the moral hazard. That's what I've been trying to talk about. I'm talking to Q people about this. I'm trying to get straight answers from people who actually believe this is all going to end well. I just don't see it. Again, to me, it seems like trillions for the bankers and breadcrumbs for we the people, Bob.
So I think Peter Schiff was being a little hard on himself. There's different ways to measure inflation. One is rising prices, correct? That the other is the purchasing power being reduced. And from 2009 to 2020, they may have said they got CPI under control, but purchasing power got eroded. People may have made more money, but more money was coming out of their check. Taxes were increasing, healthcare was increasing, prices of commodities were increasing. So people that could afford a home in 2009, for example, can't afford a home in 2020, even if you made the same amount of money. So people are losing ground that way. That's why I said earlier that this is more like an inflationary depression, where you just simply can't afford things. Even if prices don't go up, if your purchasing power falls, you're in the same trouble. And I'll use a really weird example. Look at oil. Oil's say, wow, look at oil's down 95% from its highs. Okay, that's great. But what's going to happen here is that the vast swaths of our oil economy are going to collapse. And it doesn't matter how cheap oil is if you don't have a job. And I think that's what we're seeing here. This cheap money is inflationary, and it's also deflationary. And when it's deflationary, it basically wipes out entire industries. So Peter's right to say something's going to bolt out of the blue while everybody's patting themselves on the back.
Yeah, and we have Scott Meinard over at Guggenheim saying we will never return to free market capitalism again. And he warns the Fed is pushing the U.S. towards a populist revolt. So we'll circle back to that in a second. I want to do another screen share, and I want to play this for you. This is the interview I just did with praying medic Dave Hayes, and I just want to play the soundbite for you, Bob, and then I just want your response, okay, on the Fed and on all this printing, which I'm so concerned about. And Dave said that that's just a stone in my shoe. Wait a minute. Right. So trillions of dollars to the bankers is a stone in my shoe? Just back. Okay. Yeah, so flesh that out for me.
Your shoe. It's your issue. It's not my issue. It's not.
It's actually our collective issue. It's our collective issue as Americans whose currency or money, they'd like to tell us, but it's actually currency, is the Federal Reserve note.
Okay. So hang on a minute. I'm not saying it's not a legitimate concern. What I'm saying is it's your concern.
I'll pause it there. Bob, my point in playing that is that shouldn't the Fed's unlimited printing be everyone's concern? We all have one thing in common, the US dollar.
Yeah, so my view on this is this. In the short term, it's going to look like they got everything under control because they're papering over short-term deflation. What people don't realize is, and they just have to look at Japan and China to understand that the Federal Reserve, which is being controlled by political elites or even maybe not political elites, are going to slowly own the means of production in this country. And so that's either communism or fascism. So I'm not really sure about it being, nobody's problem. I just think people need to be really concerned that we have an economy now that's being controlled by essentially a handful of people that use basically our currency as a way in which they can buy assets on the cheap. And look what they just did, Sean. They destroyed the hotel industry, the travel industry, the airline manufacturing industry, all services that are considered non-essential. And then now you have people with access to 0% loans that could come in after all the oil industry, come back in with 0% loans backed by political backers, and they just redistributed the wealth to their political appointees, if you will, their lackeys, who will turn right around and support their political campaigns. That's the hazard that nobody's talking about, that we're eventually going to be owned by the banks. That was always the logical outcome of Federal Reserve printing. Even if we don't get the inflation people think, or we don't get the deflation people think, we have now an entity that's going to control right now 50% of our GDP. That means they control all the companies they lent money to. That means if they say something that's not politically correct or not advancing the narrative, they can go and say, hey, we can easily bankrupt you. Or better yet, they will bankrupt you and put one of their lackeys in who will then carry the water. That's one thing people are not paying attention to, And look at, all you have to do is look at what's going on with the this pandemic right now, is that anybody that has a different viewpoint, even medical doctors, they're just being shouted down because there's certain industries that can charge a lot of money for the treatments that are coming about Gates versus these free therapeutics that all of a sudden you have people attacking. That's just, look, this is climate change 2.0. And now what's going to come after this is you notice they're trying to shut down the meat packing facilities around the world. And now they're going to say, well, now we're going to control what you can eat. So now they're controlling how your medical is, what you can eat. They're controlling whether you can go outside. And because they have people backed with free money, those people are not, the people are complaining the most about the lockdown not ending are people that have money and have jobs. And that's what a totalitarian state looks like. So that's why I would be worried about the Fed doing what the Fed's doing, because these people, this is a political economy now versus a market-based economy.
Yeah, and again, on the moral hazard, boy, it's authoritarianism on steroids. If we take a look at this economy right now, guys like Jeff Bezos, Amazon, making out like a bandit, mom and pop shops closed down, Walmart open, making out like a bandit, the hair salon, the bars, the restaurants, all closed down, the movie theaters. I've been saying it, I sound like a broken record, but just a few months ago, Bob, this was unimaginable. And now we'll go back to Scott Minerd, because he's saying we'll never return to free market capitalism. He's saying the United States will never be able to return to free market capitalism as we knew it before these policies were put in place. And he's warning of a revolt, which I think is long overdue. Minerd tweeted, "Our central bank will never be able to get back to normal. The Fed's balance sheet has expanded from 4.5 trillion to 6.6 trillion in just a month, and it's likely on its way to over 9 trillion soon." As you were just saying, Bob, many others have been warning the same thing. And he concludes, get this, Bob, eventually a populist revolt to address the current massive inequality of income and wealth will happen. These programs will create incentives that will reduce overall productivity. Instead, policymakers should address fundamental reforms in the economy to restore growth and reduce inequality. I don't think that's going to happen anytime soon, Bob, and that's the problem. They're taking away liberty, they're increasing authoritarianism, and the Fed is out of control. And who gets the money from the Fed first? The banks.
Yeah, or actually even now, the politically connected. I mean, look, if you make enough money, you could squawk. They just saved Carnival Cruise Lines, right? So they don't even employ anybody in America.
They don't even pay taxes.
Yeah. So, if you're connected and you can throw enough money at the politicians, you get it. I agree with you. And I think that's you're seeing it now. You're seeing in California, people who've never protested before in their life protesting, but I want to separate two things too here is that, and you always said this too, you can control what you can control, and what you can't control, you follow the civil rules that you can, but it's important for people to be able to, protect their families. And one of the reason why, I decided to trade for a living after I retired is because I wanted to make sure that I could provide additional sources of income. And as long as I could see where the money's flowing and I'm doing it legally, then, that's one way in which you can fight back against the system. The other is make sure you vote. And number 3, start making your voices heard. Might be painful at times, but you got to put yourself out there if freedom means anything to you.
Well, I agree, but check this out. These authoritarian, totalitarian tyrants, these governors like the one in California, what is that, Gavin Newsom? California governor threatens lockdown crackdown as thousands crowd beaches. These guys are out of control, and if they're going to try to crack down on the population when the population revolts, boy, I mean, they could burn this whole house down pretty quickly if this is the way these governors are going to behave. People have had enough, Bob. And so, to your point, people want to take their liberty back, but in these fascist states like California and Michigan, they have tyrants for governors. So I guess I'm not real sure what the solution is. I mean, I guess folks should go talk to their local sheriff and make sure he's on board with the Constitution. Maybe he'll stand with you.
Yeah, so I live in Southern California. It was good luck. He opened those beaches up, and they probably had 250,000 people at the beach. Okay, so I think what's going to happen, I think there's just going to be mass civil disobedience where people are going to say, your rule is doesn't make sense, and we're going to ignore you. And if, one or two people do it, they can arrest you. But when thousands starts to do it, look, the guy in Houston with the restaurant, he said, I'm opening. Come shut me down if you want. They didn't shut him down. And you're going to start seeing more and more of that. That lady in Michigan, she's going to lose her job. I mean, she's a complete idiot. And so, I feel, encouraged by what I see with the American people. And I think people's eyes have woke up. I think they're going to have a hard time doing this twice because of the phenomenal overhyping of this crisis, that shall not be named. And they spend billions on hospitals that are empty. They have hospitals shutting down because nobody's in there getting their treatments. And you have 70% of the economy that's service-based, and 3/4 of that's considered non-essential. So I don't know if they want people that normally like to work and make money sitting at home stewing over why they don't have a job. And I agree with you. I think Scott Menard's right. I think you're gonna see protests from people who never protested before, and I think it's gonna scare the politicians. And I think it's gonna break up some of these centralized monopolies too, Sean. People sitting there going, what do you mean one pork producer, 10% of our production? You're going to see people saying, you know what, we need to break up these monopolies that are controlling our food supply and our medical supply and our treatment centers and our hospitals. And so I think that's the other side of the coin, but it may be painful till we get there.
All right, final question. I just clicked over to look at the price of gold. It's at $17.15 today. Silver's around $15. I wanted to ask you about the oil market and what the futures market and all of that has done to the price of oil. I think it really shines light on the fact that these paper markets, there's so much funny money that these paper markets can be used to manipulate things that previously had value, like oil, to a negative price. I mean, it's complete madness. I wonder if the reverse would ever happen in the gold and silver market, right? Maybe these paper markets finally break and gold goes to what? 5,000, 10,000, silver goes to what? 100, 200? What happened in that oil market really, I think, shocked a lot of people. Do you want to talk a little bit about that?
Yeah. So, and I think oil will go negative for the contract that's going to end. They call it the June contract, but it'll end in the middle of May. Yeah, I think natural gas may go negative too. And gold and silver are the other side of the coin. We had a sneak peek of that. You and I talked about this about a year ago when platinum took off and doubled. And in fact, one of the subcommittees sent the LBMA and the CME a note saying, we're worried about the failure delivery starting to rise in the gold and silver markets. Are you sure you have enough to cover your bets? And what's happening in oil and natural gas in terms of taking these things down that nobody wants them is going to be the opposite of gold and silver. Everybody wants them. The market's going to go, you have no bid on the oil and natural gas side. You're going to have no ask on the gold and silver side. They just will simply not find a seller. And we don't know where those prices are going to go. My view is that, gold in that environment is going to at least jump up $2,400, $2,500. Silver is so incredibly suppressed that I can't even hazard a guess where that will end up. But definitely you're going to see it in the 20s and 30s again, and maybe even approaching its highs. So I think there's some tremendous imbalances that are going to blow up. And that's a good thing, Sean. If these things happen and we blow up these futures markets, China today closed their futures markets to oil, natural gas, and soybeans. So that what may happen here is that the speculators get wiped out. And these are bad actors.
Yeah, they are. Yes, they are. All right, Bob. Well, I really appreciate your time today. I will leave the link to Trade Genius below for folks. And I guess that pretty much sums it up. We'll talk again in about a month.
Thanks for having me, Sean.
All right, Bob. Thanks for coming on. I really appreciate it. And guys, thank you so much for tuning in. Remember, for real news 24/7, visit us directly at sgtreport.com. God bless y'all. Bye-bye.
You can remove all the corrupt people from DOJ, FBI, State Department, from the banks. You can throw all these people in jail. You can jail George Soros and jail the Rothschilds and everybody else. And if you don't make reforms to the institutions of society, evil, corrupt people are going to take the place of those people you just arrested, and nothing is going to change.